Hi, everyone, and welcome to the Fireside, a podcast where we take you on a journey in search of financial independence. So grab your beverage of choice and sit with us by the fireside. I'm Miguel, your host for today, and I'm joined by none other than crypto guru extraordinaire Jose. Fahad won't be able to join us today, but he'll be with us next week. We've got an interesting podcast for you today. Jose is going to take us over the news of the week that have been causing some stir around the community with a focus on the cryptocurrency markets. And then we're going to take you on a journey through our goals and plans for the short term and our vision for the medium term as we go on our own road towards financial independence. This will generate an interesting discussion, I hope, around one of the concepts that is often talked about in the FIRE movement, which is the FU money. We'll go into that in just a few moments. And then towards the end of the episode, we're going to recap the trade of the week. And then we'll conclude by recapping one of the more interesting tickers of the week. All right, Jose, how are you doing today?
Hello, everyone. I am doing very well. It has been an interesting week. There's a lot of stuff that happened, and I'm going to go through a couple of the things that I felt were some of the most notorious, especially in terms of news mostly. So this is something we will hopefully try to keep on every episode, just a brief touch on some of the main things that could or could not or might not affect your trades going forward. First thing, obviously, I am personally quite invested into crypto, so this is something that I'm quite closely monitoring. And the first thing is, as you probably will notice, if you open any trading graph from Bitcoin, you will realize that there has been a massive dip that has happened over this week. There's still huge amounts of pressure on crypto as a whole, coming from the various DeFi issues that we've been getting. Then, obviously, the other thing that we are still seeing is high inflation and most likely quite a lot of over leveraging that has been happening over the last couple of weeks. So as Bitcoin goes up, also greed goes up, and a lot of the greed is seen as a measure of margin trading, which obviously creates leveraging. And when the price comes down, then you see much stronger moves, and that's, I think, what we saw. And also, we have the looming Ethereum 2 merge, which is something that should be happening within the next couple of weeks. And there's quite a lot of money, mostly just creating volatility, really, because people don't know what to expect. For those that don't know, the Ethereum merge, also known as Ethereum 2.0, is essentially the merge of a parallel stream of development on the Ethereum codebase called the Beacon chain that will be merged into the mainnet. The most notorious change is something called a shift from proof of work into proof of stake. So it's a completely different approach. I'm not going to go into the details on this in this episode, but do please take a look because it is quite a meaningful change to Ethereum. Just kind of briefly touching on two other things, not so much crypto related, but that will also affect crypto. Obviously, we're still seeing China looming housing crisis that is obviously creating quite a lot of uncertainty around the world. We've obviously started seeing this in the last 9 months with Evergrande, and is still very present. And obviously, the other thing is with the US, we are seeing now in July the 6th straight drop in house sales, which is again very meaningful. And lastly, just a quick point on the Fed considering a 75 percentage point hike in September, but we might be getting some good news. Looks like inflation might be starting to stabilize, and if that's the case, we might actually be seeing a 0.5 percentage point hike, which would come as a very positive move to the markets. So that's the news of the week. Obviously, there's many more things that have happened, but we felt these were some of the more meaningful.
Yeah, that's really good. Thanks, Jose. I wanted to touch on the Bitcoin dip. I know that, or if as far as I recall, you don't actually trade a lot of Bitcoin. You delve more into some of the emerging coins, the emerging projects. Do you see a lot of correlation between those and the Bitcoin?
Yes, 100%. So there's this thing called the Bitcoin dominance. It's a graph you can actually follow. A lot of people use that as knowing when you have the altcoin season, which is probably something a lot of you have heard before. Plot twist: we are not in altcoin season. We're not in any good season at this stage. But yes, I personally steer away. Not for any particular reason, just because I personally are more uh, motivated to invest into projects that have different types of technologies. So things like Avalanche, Solana, Cardano, and so many, many more. Matic has been something that has seen huge shifts in the last couple of weeks. So I'm more looking at the altcoins, not so much the low cap. I'm looking more at the high cap altcoins. So like I would say the top 25 altcoins. And yes, there is a very strong direct correlation. And there's actually a factor correlation. What I mean with this is, let's say that Bitcoin moves 5% down, you can actually expect the altcoins to move a higher ratio. So they never move in the same
Hmm.
ratio. So, for example, a 5% on Bitcoin down, that's probably a 15 to 20% move down on the altcoins. So the altcoins are substantially more volatile, which again, it matches my risk profile quite well, which I am a bit more adventurous. Let's put it this way.
What a nice segue into our next topic. Thanks, Jose, for also clarifying my question. Um,
Pleasure.
so the main discussion that we want to have today is around goals. So you listeners of the previous episode may recall that one of the purposes of our podcast is to help us keep ourselves accountable for our own endeavors that we want to take on towards financial independence. And so we're going to start this off by actually reflecting on some goals that we can set and that we can share with the community here and that we can hold ourselves accountable to in a certain period of time. Now, what I've proposed to my fellow podcast colleagues is that we set a goal. Each of us will think of has thought of a goal that we can commit to by the end of the year, and we are also thinking towards the next year. We're going to, by around December, we're going to share with the community our a longer term plan, maybe covering or spanning a year or two or three. And that's going to be a sort of challenge that we are going to touch on regularly and see how we're doing and see how we can fine tune our approach. So, thinking of goals, all right, this can be a lot of things. And because even though we are broadly talking about the FIRE movement, the financial independence movement, it is true that we have, all three of us, including Fahad, we have come from more of a stock or crypto trading investment side of things. And that's how we kind of arrived here. And so some of our goals may be that we want our investment portfolio to increase by a certain dollar amount or percentage amount, or we want to have trading strategies with a certain risk and reward ratio or success rate, or that we just want to retire by the end of the year. I don't think any of us would have put that down, but hey, it's something that we could do.
We'll see what AMC
Um,
does.
uh, so it could be a myriad of things. It could also be on the other hand of this, on the other side of the spectrum. It could be that we look at our budgets and we trim down our expenditures so that we can increase our savings rate. There's many things, and I've proposed this to Jose, and I've thought about it myself, and so we want to share these goals and kind of tie that in to how we are at the moment. So, Jose, how do you feel about this?
I think it's great. This was and is actually one of my number one goals with this podcast is to hopefully keep myself accountable for the decisions that I make, which generally before I didn't have that motivation, and now I have. So I think it's really interesting, and I will actually invite everyone to do the same thing, do the same exercise. Everyone does New Year resolution plans, and no one actually goes through those plans. So they will work in the first week of January, and then by the second week, everyone's already looking for Christmas, and so no one is really focusing on those goals. But I really want to be able to be kept accountable, and so I'm leveraging on Miguel and Fahad to keep me accountable, the same way that I'm sure Miguel and Fahad are in their turns expecting me to keep them accountable, right? So it's not so much to point a finger or anything, but it's more the idea of ensuring that we look at what we did wrong, if we did something wrong, and how we fix those things. So for me personally, don't know if you want me to. Should I go into my goals, Miguel?
Sure, go ahead.
Awesome. Okay, so my first goal, and this is something Miguel, myself and Miguel, we actually live quite close to each other, and we meet up on a regular basis. And the other day we were talking about my risk profile, my investment profile, and Miguel's investment profile. And when we started to talk about it, we just realized that they are complete opposites. And I think it's quite beautiful on that because we find success in the opposites. But maybe that uh, ideal point is actually something in the middle, somewhere in the middle where those two extremes meet. And so, because of this, one of the things that I haven't done enough is actually keep cash on the side. And this is not cash to invest, this is just literally cash in a bank account that is somewhat relatable to my overall portfolio, right? So a lot of people say cash when they have cash on the side that is ready to be invested. I want to have a percentage of my portfolio that is just sitting in the bank account in case something happens, in case, because most of us will not have that much cash in the bank account. That the money will be invested. It will be either could be in a house, it could be on stock market, crypto, so on. There's so many ways that you can have your money invested. Could just be in the bank, on an ISA or something like that. But no, I want to have, and this is something that myself and my wife, we just gone through a sale of one of our houses. One of our houses. Not like we have many houses. We have one house, and so we just
One of our houses. One of one.
Exactly. As I said it, I was like, it's not like we have many. So our house. So we did just sell our house. We had a house in London, and we have sold that house. And this is something I can touch point maybe on a future episode, just kind of sharing a bit of our experience that maybe could help someone else out there, especially someone in the UK. But one of the things we discussed was just we don't have enough money on the side if something happens. And I think we just want to shift that. So my first goal is that by the end of the year, I want to ensure that I've got 10% cash related to my portfolio. So 10% of my portfolio, or whatever my money, my net worth is, 10% of my net worth is just cash that is in a bank that I can just use at any point. Because one of the big issues we've been having is that obviously, we have this money in crypto or stocks, and you always have this thing, at any point I can sell them. But what happens if you have what we've had, which is a massive fringe event that just kind of eroded the whole market, right? And your portfolios became negative. Are you going to really realize those losses? Probably not, or only if you really have to, and I don't want to, right? So that's one of the problems we have, and I want to make sure that gets fixed. So that's my goal number one. Miguel, I'll let you get the first goal as well, and I'll do my second goal.
All right. Yeah. Well, I actually only prepared one short-term goal, but I want to touch on what you said because I think that's very good. Um, So first, let me touch on the fact that our risk profiles are very different, as you said. Uh, so as Joseph said, he's kind of the riskier. Well, he's not kind of. He's absolutely the riskier of us two. Um, I have never ventured into smaller crypto projects or meme stocks, but I know those can work. They just don't fit my risk profile, and especially my risk profile as the investor, the fund manager of my family. So uh, I also answer to my wife on this, and so
The one that really kind
my
of, the one that is the boss, right? The real boss.
well, so the thing is, in our family, the way it works, because my wife isn't particularly interested in figuring out what stocks to invest in and etc. She does have ultimate veto power. And so, for example, that's how I actually cashed in on crypto a few years ago. It's because uh, Bitcoin was going up, and my wife absolutely demanded that I sell. And it was a decent selling point, so I can't complain. But
Exactly.
we digress here. So the the issue on my end of things is that I am the virtual opposite of this. And as I've shared with Fahad and Jose before, I haven't taken a trade since last year. Since last year, I took a very good trade actually on Amazon. I sold a couple of dollars from the peak. Um, and since then, I did have an inkling that the there was the market was showing signs of weakness, and I immediately just sold all my other positions and stayed in cash for the rest of the year and the beginning of this year, 8 months in. Um, I only hold a marginal uh, amount of Bitcoin at this point. And that's it, really. And so my goal is to combat my issue, which is the exact opposite. So I need to increase my exposure at the moment. So what I am committing to is that by the end of the year, I want to have two automated trading strategies uh, live with my brokerage account, and I want each of them to at least have access to 15% of my full sized account on that broker. So this is just that I will take trades if my strategy is good, and if the parameters are met, I'm going to take the trades without even knowing it. So this is what I want to happen by the end of the year. I do have some things in motion for this, but my issue is I do have strategies that I've been studying and preparing, but I hesitate to pull the trigger. And so my hope is that by committing on this, in 4 months' time, I'll have at least a couple of strategies that I'll feel comfortable enough pulling the trigger on.
That's very interesting, because we have discussed before this idea of having automated strategies, and I love that idea because it removes one of the most dangerous components in trading, which is emotion. Right? No one can say they don't trade with emotion because there's always a component of it, unless you completely remove that by replacing it with a robot. So these are going to be robots that will follow a particular logic. So this is something that Miguel would bake into it. Could be things as simple as, if there's some trend and that trend goes above or below, commit with a trade, and then, just that's where kind of your risk profile kind of comes in, because you want to make sure that when you go into a trade, your upside is X and your potential loss is Y, and when you get there, you sell and so on. The problem is that when emotion comes in, and this has happened to me quite a lot, and I had this experience actually last year when there was the first crash, and I don't think I've mentioned this before in the show last week, but I was actually I was pretty much all in margin. So I was using Binance. I was on margin. So I had, it wasn't a lot of money. It was probably a couple of $1,000s that I had there. But then obviously every month I would get my salary and I would take part of it, just kind of like most people will do, just take part of my salary and put it there. So which basically means that, if you're doing a 3x, because I think that was so Binance has this thing of cross margin. Cross margin basically means that you have a unified margin account, and means that, let's say that you put in $1,000, Binance will let you trade with $3,000, so they will 3x
Hmm.
your
Yeah.
amount of money. But because it's cross, it means that you can actually invest in how many altcoins or Bitcoin or whatever you want to do, right? They have something else called isolated margin, which basically is a 10x or up to 10x, which means that you need to choose one asset and just do that asset, and that's it. So I
Hmm.
actually was quite heavily invested in margin, and when things started to go down, I I went from full, like, if you're generally trading 90% rational and 10% emotion, I completely inverted that. That was 90% emotion, 10% rational, because it was like, oh my god, I should sell now, but if I sell, I'm going to sell at a loss, and oh, but my ratio, because Binance will show you a ratio of like how far or how close you are from being margin called and then liquidated. And because there was so much margin in the market, any dip on the price would be literally like a couple of thousand. Like at the time, Bitcoin was like around 50 something, and every
Right.
drop would be like a $5,000 drop, something like that, and you have like a super scary week. um and so, what I should have had at that time is somewhat of a strategy like Miguel has, which is, ensure that, and this was my first learning of, like, you should always have a stop loss. You should always have multiple levels of taking profits and so on. And this is something we'll, in next sessions, we will go through and revisit, to discuss our techniques, our strategies, how to make sure that we kind of keep our risks a bit more controlled. But I absolutely love, just kind of tying it up. I love this idea of having automated strategies, because you just completely remove the emotional side of it, right? You program the robot, and the robot will do what the robot will do. It's as easy as that. At the same time, obviously, it will require quite a lot of fine tuning, and that's something I'm very excited for Miguel to take us on a journey as well, with his experiments. But could you touch a bit more, Miguel, on what is actually an automated strategy, for example? How do you set one of those up, and if someone would like to do something like that, what tools could they use potentially?
Yeah, of course. And I think, honestly, this might be something that we want to dedicate a whole episode to introducing, and then,
Mm,
we can discuss it more and more in the future.
yeah.
But for those just starting out, and if you're curious, I would recommend you check out the a website for a framework called Quant Connect. That's quant as in QUANT, and then connect. So Quant Connect, they're on a mission to democratize the access to systematic trading for the retail investor. They provide the whole framework where you can do research via Python notebooks, and I think they also allow C Sharp, but I work with Python. So you can use notebooks to play around with the data and wrangle it and try to find your edge. And then you also have a separate part of their framework, which is for backtesting. So then you bake in your strategy in actual code with rules for which stocks or crypto assets or whatever other assets you're interested in to select. And then once you find your entry conditions, you also define when and how you enter and in what conditions you exit. And so you can, when you bake that into your scripts, you then can let the framework backtest your strategy across a very long timeline. I only have used the most recent years because I'm fine tuning some of the things that I'm seeing. I haven't gone and backtest so much further back. Um, but then it gives you a report with how your strategy did, what was your max drawdown, which is something important. It gives you your Sharp ratio. It gives you a bunch of really interesting metrics. It gives you a log of all of your trades. And so you can see Also, with it gives you your P&L chart, so you can see how your strategy fares. And to Jose's point, for example, some strategies are very good, but they have a max drawdown. A max drawdown is what was the maximum drop in your equity percentage wise at any point during the backtest. So if your strategy has a max drawdown of 30%, that means that at some point maybe it would have reached $1,000, for example, in equity, and then it dropped to $700. So within that interval, that was the maximum drop that you got. And so if you have a really good strategy, but it has a max drawdown of 30%, then you cannot use leverage on it, because if you leverage it, even if it's just 2x, then your drop down of 30% is already going to pretty much liquidate nearly your account, and you will take a long time to recover. And so Quant Connect is an amazing tool that allows you to, well, for free, you do get, it is a bit slower to work with because they impose some delays and some on your back tests and some limitations on the quality of the nodes that you can use to run the code. So it's a bit slower, but I think it's a great starting point. And then there's tons of tools, especially third-party packages that tie into Python that you can use to plot data, wrangle data, use artificial intelligence. You can, make your neural networks or use other machine learning tools. It's really a huge world, and it just depends on, how much time and how good your idea is to start with. Um, but I think that that's a good enough introduction on the topic. But do let us know if that's something that you want to hear more about. I do try and take a simpler approach to quant trading, um, or to systematic trading. I have a few patterns that I want to start with, and I want to see if there's a way that I can make those patterns that I know people trade discreetly, meaning that they trade by themselves without a bot. And I want to see if I can find a set of restrictions that I can apply to those patterns so that they can be traded automatically without me having to be there and without me having to introduce my own, you know, opinions on each and every trade, because I think that's going to be a hindrance for me. Uh, because I think that the odds are that I would probably end up exiting too early on good trades
Yeah.
and sticking too long on bad trades.
Yeah.
So that's why I want to remove myself from the equation.
Yeah. Yeah. And
So
you,
yeah.
best of all, you can trade while you're sleeping, which is amazing.
Yeah, well, my strategies are actually focused on the stock market, so not so much.
Not so
But
much.
yeah, that's the principle of the thing.
Can you
So my
actually do
goal, my
crypto
goal,
as
yeah,
well on Quantum
you can,
Connect? Okay.
on Connect, you can do crypto. I'm sure you cannot do every crypto asset,
Sure.
but I know the main ones, Bitcoin and Ethereum, and the main largest cryptocurrencies for sure you can.
Very, very interesting. That's awesome. Like if anyone is ever interested in knowing more about Quantum Connect and automated strategies, if you are a coder yourself, because obviously there is, there's a big requirement. It's not so much like a drag and drop tool. You need to know Python in this case. But if anyone out there that is listening and they would like to know more, please do let us know. We're more than happy to maybe in a future episode have a longer slot of time and go through a couple more details on how this could work. Maybe even share with you some examples of a very simple strategy and how that all kind of comes together. But I think we will leave that for another episode.
I,
Um,
I, I will just say that it sounds easier than it is, I think. And just like poker, I would say that trading and systems trading in particular is the hardest way to make easy money. So do temper some expectations. It does involve a lot of work. But
yeah.
if that's the thing, something you think you would actually enjoy doing it, then yeah, then the world's your oyster.
Awesome. I love that. I love that. Cool. So then I'll just segue into my other goal, and we can then just kind of wrap up the goal section.
Yeah, for sure.
Um, but for real, I kind of want to bring my portfolio back to positive. My portfolio has, so after just kind of explain how my last kind of 12 months have been. So I have been invested for a long time in a particular stock, which we will touch in just a bit. And apart from that, I've been mostly crypto. And due to that big crash last year around June, July, I don't even remember correctly. I decided to take a break from crypto as a whole, just because I was kind of bruised, kind of licking my wounds, and I decided to learn, educate myself. I felt that the reason why I failed was because I wasn't knowledgeable enough, unfortunately. Or fortunately, right? Yeah, I think I heard this from another trader. She's on YouTube. I think her name is Humble Trader. You probably have heard her before,
Yeah.
and she did say something that kind of really resonated with me. And in those situations when something really kind of drastically go wrong, you almost feel kind of alone, right? You both alone and embarrassed, right? So there's a component of
Yeah.
both, and really that's how I was feeling. I'm feeling like, oh my god, like I consider myself, a smart guy that is I'm very open to a lot of technologies and sources of information. I read a lot, and I felt like how could this happen to me, right? And I felt really embarrassed. And what she said was that every trader in their lifetime always needs to go through a wipeout event, like an event that almost will obliterate your portfolio, you know. And I think those are necessary to make you understand the stakes, right? Because until you lose, and this is not unrealized losses, this is like money's gone, right? Your account is, it's been a zero has been
Yeah.
sliced from your account. And these things are necessary because you do need to feel in your skin, you need to feel that pain. And this is something that I would say to everyone. I'm pretty sure that a lot of people have gone through, especially in the last 6 months to 12 months. A lot of people have gone through wipeout events, either because I can just imagine people that were heavily invested into Terra, for example, and they went to sleep and they woke up and their accounts was zero, as simple
Yeah.
as that.
Yeah.
And what I would say is, get up, take a breather. It happened. Like, just get to the reality of it. It has happened. Don't give up, right? Because obviously it's horrible, but don't give up and learn. Understand why you failed. Was it because it was emotional? Then you need to learn how to deal with the emotional side. Was it because you just kind of YOLO'd? Then maybe you shouldn't YOLO next time. But there's just so many things that you can take in retrospective, and for me, this is one of those where my portfolio has taken is not positive at the moment, and I'm happy to share that. And really, by the end of the year, I want to bring my portfolio back to positive. Either through just normal trading, doing some hedge trading. So there's a couple of different techniques that we'll go through in the podcast of how I plan to get there, and I hope to get there. So I'll keep you guys updated on my journey to bringing me back to positive and have 10% cash on the side, 10% of my portfolio.
Yeah, I think that's a good mindset to have. The one that you described, where you don't consider that you know that your losses aren't losses until they're closed. I think that's a dangerous mindset, because at any given point, your portfolio is just the amount of money that you have there. So if it goes down 2,000, then you have a new portfolio value. Um, because then if you think otherwise, then you're going to be prone to some revenge trading. I think it's good to have in mind, like, oh, my portfolio used to be here, now it's here. Okay, how can I go from where it's at now and increase X% so that I can get it back? Not, okay, my portfolio is actually the old value and I just need to gain it back. That money belongs to me. That will lead to
Yeah.
some shortfalls for sure.
Oh yeah, 100%, 100%. I think that's part of the educate yourself. It's very important for you to understand, how you can do that. And obviously, again, it's a lot of emotion, the revenge trading, and this is something very real because you feel robbed, right? You feel like, oh, someone, I want that money back. It was my money. Like I didn't do anything wrong. Well, you did. You really did. So I think that's a very good point there. Unrealized losses are not, they're still losses. That's why they have loss there. It's unrealized loss. Just means that it still hasn't happened yet, and it's in flux. But this is why it's so important to have things like stop losses and have an actual proper risk reward ratio strategy. This is something I would love to touch in a future episode, like how to set up. How to set up that ratio? What does that ratio look like? What is a good ratio? And these are all kind of very kind of open questions. The only thing I can do is share my experience and what I generally do. But I think that's going to be interesting to go through those experiences as well.
Yeah, and don't get me wrong, I've had those sort of events as well. I was fortunate to get into crypto and then have it take off. Uh, you know, pretty soon after that, or it was taking off, and then I jumped aboard, and it kept taking off, I guess. But then when I saw that, I thought it was really smart to put a significant portion of my savings into that and bank on it further, and that's when the floor was
Yeah.
the rug was pulled, and I did lose some money, and a significant amount of money, and luckily I was able to finish green. But that second trade, it was a loss, and I did keep it, in my subconscious, like it's not a loss because it's still open, and it was open for like 2 years.
Yeah.
But in reality, it was a loss. And you know what? If I had closed that loss as soon as I realized it was doomed, I could have reinvested in something else and recouped that money much, much faster
That's
than I did.
exactly it. That is actually a very good strategy of, because you kind of, again, emotion. Like we keep coming back to emotion, right? Because you're thinking when you see that coming down, right? Those red bars. Unless you're shorting. If you're shorting, you want to see red bars. But like if you're just longing and you start to see the price coming down, you don't want to sell, right? Because you feel like, oh, if I sell, that's it, it's over. Really, it's not
And you have
over.
to and
Like,
you have to admit that you lost, that you were wrong.
yep,
I think that's
yep, yep.
more, sometimes it's more that than the money itself, right?
Oh yeah,
Especially
yeah,
if you're trading small and you're still clingy, then it's just a fear of admitting defeat
yeah.
as
It
well.
is, it is, it is 100% because it's like I'm not gonna lose. Like you're gonna lose, and I will prove to you that you're wrong, and I'll keep my my trade open and so on. But like really, what Miguel said is if and again it's all about having a strategy, right? When you go into a trade, you really need to be like, okay, here's the reasons why I'm going to this trade. And as time goes on, these things will come easier and faster. But really is, okay, I'm going to this trade. Here's where I'm comfortable to go in. Here's what I want to take money out because I'm going to be happy with X% profit. And here's where I'm getting out because if it drops below this, I'm out. And the fact that you're out, that means that you have cash in your account available to go in again. And just think of it, like if you, let's say the price is 100, right, and you went in at 100 and you want to sell at 120, but actually the price drops to 95. If you go out at 95 and let's say that the price then comes down to 80, and if you come in at 80 and you basically write it back to around 95, you've actually made more money than if you got in and 100 and went to 120, right?
Yeah,
Because
you
again,
just saved
the
the $15 difference.
exactly,
Yeah,
exactly. So that
absolutely.
psychology is really important to get your head around because this is the strategy that will make you think not as a loser but as a winner because you're actually coming out.
Actually, that's bang on point. You're not. you're not trading to win, you're just trading to, to follow good trades, to
Yep.
follow good opportunities. So as soon as something
Yeah.
stops being a good opportunity, your ego doesn't play a part in it. It just,
Yeah.
you're out because there's
Yeah.
no reason to be in.
Yeah.
All right, I think there's much to dive into this, but let's wrap this section around. So our goals for Jose and myself, and we look forward to hearing from Fahad the next session that we have. For myself, my goal until December is to have two live automated strategies with at least 15% exposure of my portfolio in each of them. And for Jose, his goal is to have 10% of his total portfolio to be in cash savings and to bring his portfolio back to positive by the end of the year. Superb goals. Thanks, Jose, for the discussion. I think this was
Woo.
very good.
Amazing.
And to segue this into our mid to long term goals that we have in the back of our minds and that we want to start pursuing, I think, more actively as a New Year resolution, we want to talk about a project that we want to introduce called The Road to 1 Million. All right, The Road to 1 Million. 1 million is $1 million. We want to take our financial journey to be able to afford us more independence in our lives. And we came up with this $1 million figure because it's a nice round number. And we're going to touch on this a bit later. $1 million for most or for some people is actually, well, largely more than you would ever need to live comfortably off of the dividends of that. So we're going to talk a bit more about this, but we are planning for the new year to share with you guys our thoughts, our strategies that we want to diversify into and implement so that by some time frame, TBD, we will reach this mark. We'll reach this mark, but this will be our midterm to long term goal. Uh, and so this goal ties into the concept that has been uh, floating around in the fire community of FU money. So this is a PG-13, I guess, podcast. FU money is basically the money that you need to tell your boss or really anyone that is just pestering you to go screw themselves, right?
Exactly.
It's the kind of money that will afford you the privilege of experiencing what you want to experience without fearing for your financial stability and pursuing what you want to pursue. Jose, what are your thoughts on this? Had you heard of FU money before we started preparing this session? I guess we'll
Yes,
start with that.
yes, yes, yes. I have. So this is something that is mentioned in many other YouTubers and influencers and so on, podcasters. Um, yeah, it's a really interesting concept, especially if you work for someone else, because it's gonna be what allows you to kind of go and show that middle finger and go like, okay, bye. Um, and that 1 million mark is it is a number, like Miguel said, that will allow you to live comfortably. For myself and my wife, when we had this conversation, actually we discussed it would be 5 million. It would be our kind of FU money. But really, you cannot get to a 5 million before getting to 1 million. So I think as a group ourselves, Miguel, myself, and Fahad, we just felt like, all right, why don't we set this goal of having 1 million? And it's not a race, it's not nothing like that, it's not a competition. It's literally because we're going to do it via different ways, and
Mm-hmm.
we all have different portfolios which we are starting with, and investments and so on, but really is an exchange of experience. And it's just to give you an example, There's someone that I would like to invite into this show. And by the way, this is something that we've been discussing recently, which is we would like to start bringing some guests into the show, mostly because they will bring a breadth of experience on their own. And I think really that's what all of you are here to hear is the experiences. And just the three of us on ourselves, I think that obviously that will get, there's a limit to the amount of experience we can share, but like just bringing that external insight. And I've got a friend of mine that just recently purchased the house via a way that I didn't even know it was available. So he has some a certain portfolio of stocks, and his broker in particular allows him to essentially get a margin on that money, right? So let's say that, for example, he has $10,000. The broker will say, we allowed you to get, say, like a 3x, right? So $30,000.
Mm-hmm.
And so what he did, he basically analyzed and he said, okay, the interest rates are actually pretty low, because in order for you to even be accepted by those kind of type of products, you need to go through a bunch of like checks, right? So it's, again, for the broker, it's a bit more or less risky, which means because they hold that collateral from you, and if you get anywhere close to a margin call or a liquidation, your money is gone. So they're fine. So the interest rates are actually quite low. And so the interesting thing was what he did. He essentially bought two houses using margin, and with that, he actually is paying much less interest rates than if he would get money from a bank. And he has full control over that, right? He's not on the side of the bank. He can manage that directly with his broker. So I just found it's like a super interesting way that he's finding, again, to get to that goal that he has, which I don't know what his goal is, but again, just to get it to the point that there's so many ways you can get there. And I think what a lot of people kind of don't understand is that, one, this is a very achievable goal, right? This is not out of the reach of everyone, right? Obviously, it's going to take longer to some people. It's going to be faster to the other ones, but everyone can get there. The only thing is you need to be disciplined, right? And you need to stick to your strategy. If you set up a strategy and you stick with it, you will get there. So I really like this concept. I'm very, very excited to kind of see how this progresses. And hopefully in a year or two, we're very close, if not there already.
Well, I like your optimism, Jose.
Always.
I'm not going to commit to having $1 million net worth in a year. I can tell you just that. But I will say I like the optimism of you saying, it's a very achievable goal. And of course, it really depends where you're starting from, what your skill sets are, and also how much you have already put into it in terms of research on how to make your money grow for you and work for you. But let me talk a little bit about how for me this $1 million mark actually feels right. Okay, so we, Jose and his family, myself and my family, we live in Portugal, and $1 million here, which, funnily enough, right now is nearly just about 1 million euros.
Womp womp
Um,
womp.
so tough times. Anyways,
Yeah.
$1 million actually is a huge amount of money. Most households, if they have a budget of 2,000 euros a month to live on, they already can live quite comfortably. They can have a decent place to live and decent
Do
lifestyle
you
as
actually know
well.
what's the average price of a house, for example, in Portugal? Like comparatively with other
Um,
countries?
I don't have that index top of mind. I don't want to make something up, but I do know it varies. It varies from city to city.
Right.
Just last year, I was buying an apartment at the same time as a friend from Lisbon, and of course, we live in Porto, which is the second largest city in Portugal. And just you know, him compared to me, his house was about the same, but maybe I think 40% more expensive just because he was
Wow.
in Lisbon.
Wow.
So it's really hard to say. But for where we live, a 2,000 euro budget um, is plenty to live a good lifestyle. No, not extravagant in any
Yeah.
by any stretch of the imagination, uh, but good enough that if you have your to assure your financial independence. Because we can't forget that once you get out of the rat race, of needing to work for money, a lot of your expenses go down with it. You stop having to eat out, especially things that it's just have a quick bite from somewhere that you don't particularly like. It's just for your half-hour lunch. You stop having to take those as often. You stop spending so much on gas, and you stop having to spend so much on daycare for the kids, for example. So a lot of your expenses just go down. Um, and so we came up with this $1 million figure for us because if you apply the 4% rule to it, which is basically a term within the fire community, the 4% rule is a principle that states that your net worth, your net worth target should be such that if you take 4% from it, or if you increase it by 4% and live off of that increase every year, you can cover all of your expenses. And so, if a $1 million net worth increases 4% every year, which is on par with just putting it all on SPY. Actually, the SPY has increased over the past 30 years. It has increased an average of 6%, including bearish years, a year. And so that 4% rule, it would say it determined that I could live, me and my family, out of 40,000 euros every year, and that's well above the 2,000 mark for every month. And so already I see that $1 million or euros is way above what I would need to live independently. But we want to have some cushion, right? So that's why this value seemed good, and also I think just it it kind of signifies for me, like, hooray, you wanted capitalism, you've unlocked the
Hurrah.
achievement, now go have some fun,
Yeah, exactly.
so it sounds like a good achievement to have. Thoughts on this?
Yeah, no, I think it's a very good point. The 4% and having that, I think it obviously varies from person to person, but at least in Portugal, again, like 4% of a million, 40,000. 40,000 is actually a pretty good level, obviously, because you don't need to take into account, it's not really a 40,000 salary because you don't take into account taxes and so on in terms of a normal salary. So that makes a lot of
Hmm.
sense. And you wouldn't be able to buy a Lamborghini or something like that. But again, that's not everyone's goal. It's not my goal. Don't know if I don't think it's Miguel's goal as well. So
Nah,
there's
I'm good.
exactly. But yeah, it is to a point, and the it gives you that guideline of what you're basically working towards. Um, so yeah, for me and my wife, we didn't apply the percentage. It was more like, it was literally the first number that came to your mind when you think about FU money. That's where the 5 million came from. And when we then started to speak with Miguel and his wife, and we started, okay, let's actually dive deeper into this logic. And we started to realize that there was just so much in common. So yeah, I'm very excited to see how this evolves in the coming months. If our perspective of this kind of road to a million, if it becomes clearer, if it becomes easier, if it becomes more difficult, and so on, I think it's going to be very, very interesting. What would you say is your first step? Like, I'm sure that you have kind of segmented this road into either phases or steps. Which would be your
Hmm.
first step? What is the kind of the first thing you're looking to do to get you en route to this 1 million mark.
Yeah, you're absolutely right. When I thought about this goal, I couldn't just write a number and plaster it on my wall and then hope to achieve it.
Yeah.
And I think that reaching that high for that 1 million actually made me realize, you know, that there's no way I'm going to reach this goal just on my salary alone, right? And so this opens your mind. You start thinking, okay, if I'm ever going to reach 1 million, I really need to start reaching, reaching out and expanding a bit, stretching. So it all starts for me with the savings rate. And this is because for you to be able to live off of 4% of whatever your target net worth is, you need to also make sure that whatever your expenditure is can be covered by that 4%. So your target value is smaller if your expenditure is smaller, right? And at the same time, while you have a steady source of income, if you have smaller expenditure, you can use a larger percentage of it to contribute to your overall goal. So my first goal is to do a little better at tracking my own expenses, because the last few months with moving houses and switching jobs, we have gotten a bit less careful with tracking our expenses. And segueing from that is we want to hit religiously every month a 50% savings rate at the very least. And then from it, and in line with our earlier discussion on goals, I want to make sure that I have some money set aside. For us, we decided on 6 months worth of expenses in the bank or in cash or whatever. And then the rest, I'm forcing myself to send it to my broker or to my crypto exchange or whatever, sending it and applying it. Because otherwise, it's just going to sit in the bank and getting devalued, as it happened to all of my savings that were in the bank this year. It just got devalued. So that's my, I guess, my first few stages is to uh, track better, save more, invest all of the rest.
I think one of the things you mentioned is really important, which is tracking. I think budget tracking. I think there's the vast majority of people do not track their finances. I didn't used to. I actually found a tool that there's thousands of them out there, and for me personally, one of the things that would really kind of generally deterred me from using these tools was just like how much work there was. I would have to log in on my bank, export the
Mhm.
statement, import statement, blah 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 blah. It was just such a hassle that I almost wanted to hire someone and pay them to do this for me, because it was just like it was terrible. I actually found a tool. It's called Budget Bakers, which is incredible, because with the emergence, I don't know how well it works in the US, because I don't think US is still it hasn't still embraced the open banking system as much as Europe has. But in Europe at the moment, every single bank was forced to adopt open banking, which basically means is that banks allow or provide an interface that other banks or other tools can interact with to request transactions and so on. So what that allowed it to do is to have tools that are directly connected to your bank, and basically on a daily or twice a day or whatever it is, that frequency, they will get all those transactions. So in our particular case, me and my wife, because we used to live in the UK, we moved back to Portugal, we have investment accounts, we used to have a mortgage account. So it's like there was just many accounts. I think in total we probably have altogether probably over 10 different bank accounts,
Wow.
or not just bank accounts, but for example, we use Revolut, and Revolut
Mhm.
has like X amount of currencies. My wife is from Hong Kong, so we have Hong Kong currency that we sometimes use. There's GBP, there's US dollars, because that's what used for stocks and crypto. There's just like so many different currencies, and each currency then becomes its own account. So it's not different bank account, but it's an account. It's like a different source of transactions. So this tool, Budget Bakers, allows you to essentially hook all of your accounts onto it. So you just say, I live in Portugal. So we'll show you like the list of banks in Portugal. You choose your bank. That sends you to your bank and you log into your bank. It's a read only. So obviously there's no way that these systems can, take money from you. It's just a read thing. So they can read it. And then they show you all of your transactions, and you can catalog each of your transactions. You can automate the process by saying anything that has PayPal on the name, I'm going to put it in shopping, or anything that says, transfer. This is a bank. This is like a money transfer. Some going somewhere, and so once you do this. Like at the moment, I generally go in once every 2 days, and I just kind of check how everything kind of is. But it gives you an enormous perspective of just like how bad you are, because you will realize how bad you are at managing your own finances. We had subscriptions that we didn't even know anymore, because how many people log in on their bank and actually go through every single transaction, and you look at your statement. You do. All right. So Miguel is saying he does. Okay. I didn't do it until I actually used this tool. And so just kind of circling on what Miguel was saying, just kind of wrapping it up, is the first step is building your foundations. You will not be able to get to a million or whatever your goal is unless you have your foundations straight. And that is, just like Miguel said, it's first of all, savings is monitoring, right? Because if you don't monitor, you don't know if you're saving. So, have a good monitoring tool that allows you to see where you're spending the money, and more importantly, where you can potentially save, right? If you realize that you just, you're shopping or your food out, right? You're eating out is like above X, then you just go like, all right, I think I need to start, slowing down on going out, eating out, or whatever it is. And that will go a long way to get you on that track.
Yeah, and I think this can go both ways actually. So it can help you realize that there's things that you don't value as much as what you're spending on them, and so you can cut them easily. But also for folks who are on the other side of the spectrum and actually have difficulty spending money because they feel guilty, it can work to help you as well. Because if you have your goal of 50 or 60 or 70% savings rates, once you've hit that, then the rest of the money that is unaccounted for, you should reward yourself, because ultimately all this talk of growing your net worth and etc. is so that you can enjoy your life more. And so you should reward yourself incrementally as you progress and as you get better towards that goal. I want to ask you about that app actually.
Yeah.
Does it allow you to create your own categories?
Yes, it does.
Okay, that's fantastic because we've been doing this sort of workflow that you've just described through our bank app, but it doesn't let you create your own applications. It just has some predefined ones.
Yeah.
And of course, we have our own that kind of suit the way we manage our money. So we're going to for sure give that one a try.
Yeah.
And for
it's amazing. And just to kind of touch on that, it doesn't allow you to create top level categories. It only allows you to create second level categories. So, for example, a top level would be shopping, and inside shopping it would be TV or computers and so on. So you could create another one inside there, but you wouldn't be able to create a top level one, because the top levels are kind of like what defines a very broad spectrum of things.
Yeah, I think that's fine. That would suit me well. Just wanted to add for our US based listeners, in previous podcasts that I've listened to, I've heard mention of a different app called Mint. And it sounds similar. I never tried it because I think it's US only.
Yeah, it doesn't work.
And I regretted that there was nothing that I knew of in Europe that could, hit the same spots. So yeah, I'm glad that you just shared that. Thanks, Jose.
Ooh.
So
maybe we can get them to give us some discount codes.
Sponsorship.
Yay!
So I want to ask you a question about this topic of FU money. So I think that there's a decent chance that I'll hit this milestone expecting that that's going to be some transformational mark, and then realize that, you know, it was always inside you, kid, you know? So what is something that you guys, if anything, if you've discussed anything, what is something that, by the time that you reach your 5 million mark, that you're going to change about your life? Like, for example, do you plan to stop working altogether and just travel the world, or what's going through your mind for that?
That is a great question. It's a very philosophical one as well. I don't think I will ever want to stop working. I enjoy what I do too much, and just for example, coding. Right? I sometimes just work until late hours at night, not with a particular like you know monetary goal to it, but just because I fundamentally take a lot of enjoyment in doing it. So I think that there's a huge component there of just like I just do really really love working. I love that satisfaction. um I don't think it's nothing changes. Again, it's in theory it's just a number, right? It's a meaningful number, but it's just a number. I think there's a lot of things I would love to do if I ever get there. I think one of the things that I would love to do is get involved with either private equity investment. I know that 5 million is not that much. So again, I'm saying 5 million because that would be our number. Because I think a million is it's probably not enough for you to you can get, because obviously you can get involved with a private equity investment from as little as $5,000, right? And even less, especially if it's friends and family. But obviously it's as well, unless you're lucky enough to get in on a unicorn, then you're
Hmm.
probably not going to make a lot of money out of there, and maybe your money's better placed elsewhere. um, but I would love to get involved with investment. I do fundamentally love to be involved, especially with stuff like gaming and blockchain and stuff like that, which are things that personally motivate me a lot. I think that would be probably my biggest shift, is that I would probably look into being more of an investor, and less actually working for someone else. Not that I do now at the moment, but I was probably something I would focus in that sense.
Yeah, I agree. And I think for me, because, well, for the benefit of our listeners, Jose already has his own business that is his main occupation and main, I guess you could say it's your main source of income. I
Yeah,
think so.
yeah, yeah,
Uh,
yeah.
for me, I work for a company as a software engineer, and I think that this FU money, it wouldn't be me saying FU to my company because I actually like them a lot.
Yes, you would.
Uh,
Yes, you would. You would. Yeah, definitely would. You'll be like, ah.
hey, they could be listening.
Oh
No,
no.
just kidding. No, I actually like the company a lot, but I do think that my shift would be in terms of working on my own things from now on. Like you, I don't see myself stopping working at all. I might slow down a little bit, so some weeks I may do a lot more hours because I feel like it, and then some random week I might just take it off to spend time with family, uh, with more freedom than what I can currently afford. I think that would be my fundamental change, that I would just focus on the projects that I want to do, and just for the heck of doing them, not for the not for the sake of trying to hit some return on the investment or etc. We have hobbies in common, and they are hobbies that can lend themselves to pet projects. And some of these, um, maybe if you want to do it the commercially viable way, it's kind of not that fun. But if you don't need to hit any sort of financial targets, then you can just do whatever you like, whatever you would enjoy about it. And you know Who knows? Maybe it will actually be the reason that it's a success,
Yep.
but the biggest or commercial success, I would say. But it would have been a success either way because it's a worthwhile way of spending our time.
Well, money or lack of money is probably one of the number one sources of stress and anxiety and all this kind of stuff, right? And so not having that component is, again, it's a huge thing. It's a huge thing.
Yeah, we have gone a little bit over time, but I just want to wrap this
Just a bit.
section. I want to wrap this section just by going back to that 4% rule, because the people who advocate for this 4% rule, usually their mindset, where they're coming from, is they want to hit a number so that they can comfortably live out the rest of their lives without having to put in one more day of work,
Right.
right? So that's why they need to have such a high net worth that when they see returns on it yearly, they have to be enough to cover all their expenses and the risk of an economic downturn. But if your goal is to just continue working anyways, just with more freedom, more freedom to pursue what you want, more freedom to make your own hours, more freedom to just take a hiatus for a year or whatever you feel like, or to travel a bit more, or
Yeah.
to indulge a bit more on your hobbies, then you don't need to go for that 4% rule. You can go for a higher percentage. Like for me, I think the percentage I have in mind is 6 to 8%. And where I'm coming from is I can make this a bit higher. So, for example, if I want to have 40% return on my net worth every year, then if I want 80% to give me, sorry, if I want to get 40,000 euros a year, then my net worth has to be 500,000 euros,
Yeah.
because 80% of that will give me the 40,000 euros.
Yeah.
And so I've just sliced my target in half if I go for this approach, because my objective is not to then just do nothing, work wise for the rest of my life. If I'm just going to keep working and some of that work will be turned in for profit, and if it doesn't, I can just go back to the workforce because I have skills that are marketable. Then you can go for a higher percentage and you can remove a lot of that pressure because shooting for 500,000 euros is much more achievable
Yeah.
than, of course, twice as much. All right.
Yeah.
Any parting thoughts on this topic, Jose?
No, I think we've gone through everything. I would love to hear if any of our listeners has the same or a similar objective. If you do have a road to X money, tell us how you're planning to get there. What's your first achievable or palpable objective, and share it with us, because by sharing with us, maybe we could be missing something, or it was like, oh, that's interesting. I haven't thought about that. So again, we want to learn as much as we can from you guys, and yeah, do make sure to share with us.
Yeah, for sure. And also, if you have other goals that would tie into this financial independence, early retirement theme, but that are not pegged to a money value, then also share those with us. I think that would be
Totally.
an enriching experience for everyone, and we're surely curious to hear your thoughts on this. So our last segment for today is a recap of one of the tickers that you know, if, has caught our attention in the past week or so. It's one that I haven't personally traded ever, but I know it's on top of a lot of folks' minds, and this is AMC. So, as I said, I haven't traded this ticker in the past, but we have, fortunately, our resident meme stock expert, Jose. I know you have had some position in
uh
AMC, and you
yeah.
still have some, I think. Uh,
Yeah.
so
Yeah.
before we touch on the current events on this ticker, why don't you walk us through how your roller coaster has been through this ticker?
Tell you what, yeah, you'll understand my risk profile or some of my loose risk profile, and I think it's gonna. I'll explain as well. How my wife comes into it as well. Uh, Completely opposed to Miguel's wife. So uh, actually, I started looking into, like a lot of people did, especially the stock market. So crypto has been something longer. Stock market was something that I really haven't been too involved with. Only after the pandemic, like many other people started, and they were at home and didn't have a lot to do. So I was like, oh, I'm gonna start looking into this. So that's how I started. I had a friend of mine that works at Facebook, and he was involved, not personally, but some of his friends were involved with GME. If you remember, if we
Hmm.
touch the meme stocks, there's two main ones, which is AMC, GME, and there's to a smaller extent BlackBerry, BB, which they were all kind of memified. So Jira really started with GME, and for those that don't know, GME had a monumental short squeeze. What a short squeeze is generally when there is so much short strength. There's like essentially there's so much people shorting a particular stock, and that the price goes up. And generally when you short, you're always doing, or you're generally always doing margin, because you're borrowing. You cannot short without borrowing, right? Because what you're doing is you're starting by selling something you don't have, to then buy it back at the lower price and capitalizing on that difference of price, right? So
Yeah, let me
yeah,
just put it into context. Try to simplify the context, the term short squeeze. So it's something that this community we talk about a self-fulfilling prophecy. So the short squeeze is one of those things where, as Jose said, when there's so many people that are betting on the stock going down, that means that they went short. And to do that, they need to borrow shares from someone who's holding them long term to then sell those shares on the market, hoping to then grab them at a smaller price. So when there's so many people that are betting on the price going down, shorting is actually more dangerous than going long, because when you go long, the maximum you can lose is all of the money you put in. But when you go short, the maximum you can lose is all of your money, including the money that isn't,
it's
on the
really is
trade, on the
infinite.
broker,
Yeah, it's
etc.
infinite, right? Because there's no upside to, there's no limit. Like it'd be $1 trillion that the stock goes to or more, right? And
Exactly.
no
Yeah.
stock can go below zero. So that is a very fundamental concept that people grasp with shorting. Yeah,
So
it's a good
so
point.
so what ends up happening is when there's so many people going short, as soon as the price goes up a little bit, then some of these people that are short will fear that it's going to go up further. And so they will close their short position. And to close their short position, they have to buy the stock. And so they cause the price to go up higher. And this causes other people who are short to have the same fear that it will go up higher. So they close their short, causing it to go higher. And so this becomes a self fulfilling prophecy where the first few people who saw the increase in price and were afraid that it would increase further actually trigger an avalanche that essentially squeezes all the people that were short out of the trade. And that's why it's called a short squeeze.
100%. That's a very good explanation. Thank you, Miguel. And so what happened at that stage was that GME had its first short squeeze, and so did AMC. This was sometime in January 21, I think. So it's over a year ago. Yeah, it was January 21. And so they had their first short squeeze, which was a smaller short squeeze. GME had a very big one. AMC had a kind of small one. So it went from something around $12 to around $20, which that's almost 100% increase. And it kind of started to stabilize. I think it came down to around $8 in between. So initially it came down to like 5 and then stabilized a bit. And that's when I started to come in. So I'm a huge supporter of DCA. So for those that know, DCA is dollar cost averaging. Not going to go into a lot of detail, but if you want a safe way to bet or to invest, DCAing requires almost zero kind of technical knowledge. So do look into it, and if you do want us to cover this in a future episode, do let us know. We're happy to kind of go into a bit more detail. But essentially, I started to do DCA into AMC. So every couple of days, I would take a couple of $100, and I would buy some more shares, because I fundamentally believe in cinema. I'm a huge movie fan. We used to have an actual AMC cinema. One of the very few in Portugal was
Mhm.
literally a couple of minutes from my house and Miguel's house. So there's quite a lot of like emotional value there. So I started to get in, to the point that I had a sizable position within AMC. And, and by June of 2021, around June 2021, the self fulfilling prophecy that Miguel was talking about really kind of came to be. So I clearly remember driving to my parents' house, which is like 15 minutes away from here, and my wife was with a phone because she also started to get into AMC herself, and she was telling me like, "Oh my god, it's $30." I was like, "Oh Jesus Christ, $30 is crazy." And then we drove like, remember, it's like this is a 10-minute drive, and we left our house. The price was like $30 or $40, and by the time we got to my parents' house, was like 50 something, $60. And then all of a sudden, our average entry into AMC was like $9. And so you can imagine
Wow.
the upside that we had. And so like any sensible person at that stage would say, all right, okay, I think I needed a Raquel, which is Miguel's wife. I needed a Raquel in our lives to say like, you stop, sell.
No choice.
No choice. And what happened? We got greedy. We kept thinking of like, to the moon, and there's no upside. It's gonna go to 1 million to $1,000, and if you go on YouTube, and you had this massive bias towards like this is literally gonna skyrocket. Um, and it didn't happen. It went up to around 70 something dollars. Our portfolio was like 8x our initial entry, and obviously it came down, and we didn't sell at the top. So obviously we also didn't sell on the way down, and obviously we kept getting smaller entries, and now we are at the point where AMC came all the way down back to 10, and now we went back to around the 20s. So there's a lot of speculation that another short squeeze could happen. But again, we are not financial advisors, so please do
Yeah,
not
for sure.
take any of our. This is not advice whatsoever. This is just literally our experiences. And why did you want to touch this in our trade of the week? Yeah, go ahead, Miguel.
Let me just say before we go into that. First of all, I think that was an amazing experience that you guys went through. Uh,
Roller
I
coaster.
I have I have never had, even when I got into Bitcoin early, I've never had that much unrealized profit in my account. And of course, hindsight is 2020, right? After you saw that the top was 70 something, then it was obvious that that was the top. But then, when you're in the moment, uh, why would you have had a reason to think that 60, 70 was the top, right? For all you know, if you had a Raquel in your life, you would have sold probably at 13. Because
Yes,
if your
it's
average
true.
was 9,
Yeah.
13 is like nearly 50%. You should be happy with your wins, right?
Yes,
So
exactly.
hindsight is 2020, and in order to win big, like in order to win biggest, you do lose chances on winning big. But
Yeah.
if you go for the small wins, you would never get the big wins anyways.
Yeah.
So
I
yeah,
think
that
that
brings
they're
us to today.
uh,
Yeah, go ahead.
yeah, no, I was just gonna say that one of the things that forced me to learn was you know, technical analysis, because this is if I actually knew what I know now, again, like Miguel said, you know, 2020, you know, it's very in hindsight, it's very easy, but actually there was a way to not predict. No one can predict. No one is a psychic. It's not sidekick. A psychic to predict a sidekick. I love it. No one
No
can
one is a
predict.
sidekick.
No. Miguel is my sidekick, and Fahad, and so no one can really predict what's going to happen, but you can educate yourself on the highest probability. Remember, the market is, if anything, a game of probabilities, right? And you know, what you're looking at is the probability of the price going up there and essentially bouncing, right? Inverting, right? Because that's what you're looking at. And there are ways to do that. That you can say, all right, it's more likely that the price is going to go up to there than to the other side. And actually, if I knew TA, I could have looked at it and say, okay, this is actually quite likely to be a level that is going to be it's going to face some resistance, and resistance basically just means it's going to get there, and there's probably going to be a lot of sell strength that is probably going to bring the price down. And it's something we want to touch in a future episode of the Elliott wave theory and the Fibonacci's and so on. And those two main tools, if again, you know, you Miguel was talking at the beginning of like back testing, you know, that's something I could have done at the time, and it could have helped me to make a better decision, not to just be like, "Hey, to the moon," or like, "Oh, I don't know what's going to happen." To actually be like, "Okay, the most likely scenario is that this is going to happen. I'm actually going to sell part of my portfolio," because any smart investor will have multiple exit strategies and multiple entry strategies, and so that's kind of like that's a pathway to success. And just to kind of touch on the point why we're talking about the AMC. So this week, AMC, or actually a couple weeks ago, at the beginning of August, AMC had their earnings call. Earnings call is just like it's basically every 3 months or every quarter, companies, especially obviously public traded companies, they are required to do earnings meeting, which basically they just go through how their quarter is. Like in bottom, there's two main numbers people are looking for, which is the earnings per share, the EPS, which basically just means that if you're going to take dividends from that particular company, you know, that's your earnings per share. And also you want to look at the revenue. So what you want to look is like, okay, is the company actually increasing their revenue or not? And so AMC, you know, because of the pandemic, has been in, you know, pretty troubled waters, like any kind of entertainment or physical entertainment medium. It has been really tough. And so that's actually one of the reasons people went so hard and shorted so much, because they thought cinemas are going to go and disappear. The same thing happened with cruises, for example. Cruises were heavily hit as well. Any kind of like physical shops, hotels, and so on. So like obviously you can imagine. And so they had their earnings, and during their earnings, they announced a completely new way of you know, people, they're not calling it dividends, but it's in a way it's a type of dividend. They created a new ticker called APE. For those that are not in the meme space, everyone that is on AMC, on GME, they are called apes, because you know, we ape into, so aping into something is kind of like almost like a YOLO, right? You don't think about it, you just like jump into it and you follow the crowd. So Adam
Yeah,
Aaron, which is this, yeah, go ahead.
and it also appeals to like the tribalism
Yeah,
of apes strung together. You
yeah,
know,
yeah,
like we're in this together. I
yeah,
think
100%.
It's brilliant marketing.
Oh yeah. Oh, look. If anything, Adam Aaron, the CEO of AMC, and his marketing team should get an Oscar for
Yeah,
literally they looked at something that was brewing, that never in the history of the trade markets has happened. They saw an opportunity to capitalize on retail traders, right? Uh,
Yeah.
and they did it brilliantly, absolutely brilliantly. And you seeing what is happening now with the company at the state that it is, the amount of debt. So they went from being almost bankrupt to being getting out of debt, which is like, if you compare it, like this week, Cineworld, for those that know, Cineworld is a very popular cinema retail chain in the UK and other companies, but mostly in the UK, is probably filing for bankruptcy, right? So you have on one side AMC like prospering, and then you have Cineworld on the other side going bankrupt. So there's definitely, they're doing something right, and I think the thing they're doing right is capitalizing on the apes and the ape movement, um,
Yeah.
and just kind of
They
like,
just made the penny stock look cool,
yeah,
right?
yeah,
There's so many people in here. I was once, by the way, I was once in a job interview a year ago where the small talk in the interview was meme stocks. Like my
there you go.
interviewer was like, "Oh yeah, you like trading? Oh yeah, I bought some. I think at the time it was GME. And I was like, I bought some GME, and I asked him, "Oh wow, what do you think about the
Yeah.
fundamentals? I think it's a bit risky now to hold it. It's a good selling point." And he's like, "Ah no, I'm just diamond handsing it.
Yeah,
Whatever. I don't know anything
yeah,
about the stock." I was so what? It's just some
uh,
random dude is making
yeah,
conversation
yeah,
about
yeah,
holding
yeah,
this stock.
yeah.
Amazing.
No, 100%. And like again, that it's a movement that has never existed in the history of the trade markets. So I think it's incredible, and it's just showing how strong the retail is. And by retail, what we mean is just like non-institutional investors, so like just any person like ourselves, right? That have an individual account, a trading account. So those are the retail traders, and yeah. So this week they announced a new ticker in the New York Stock Exchange. It's going to be called APE, which stands for AMC Preferred Equity, and essentially, really, it's going to be a one-to-one to it's going to be a one-to-one to AMC, which essentially just means that if you all hold 50 AMC shares of AMC, you're going to get 50 shares of APE. And the value of APE, I believe, is going to be. It's generally, I don't think anyone knows particularly. It's going to be, it's going to open at a particular level. I don't really know it is. I don't know if it's going to be the same level as the kind of the related share price of AMC. But the interesting thing is, a lot of people are thinking this is like dividends, but it's not. Adam Aaron already came public and he said that it's not dividends, just because of being preferred equity, which is a specific term within the trade markets. So it's going to be very interesting to see what happens. The window to hold AMC in order to get APE closed on Friday the 19th, which means that on Monday the 22nd, in theory, everyone is going to have their apes in their portfolios. And a lot of you might ask, like, well, why is he doing all of this? It cannot be just marketing. And it's true, it's not just marketing. There's these two main things called synthetic shares and naked shorting, which are, I'm not going to go into them right now. We don't have a lot of time, but they are like it's kind of like the dark side. If you're looking at Star Wars, it's kind of like almost the dark side of the Force. Because it's something that is, again, is the reason why it's called dark is because it happens behind the scenes. People don't really see them. So this idea of dark pools, which is basically kind of like separate ways to sell and buy shares that generally only institution traders will use. But what's the core of it is that, let's say that AMC has a million shares. They have more, it's like 500 million, but just like a million shares. We were touching the road to a million. I like a million shares. Let's imagine this. And when you short, as Miguel was saying before, you actually borrow a share. Now, what a lot of brokers do, which they shouldn't, is borrow the same share to multiple people. Now, think of this using car as an example. I lend my car to Miguel, and Miguel, in his turn, will lend the same car to 10 different people. Okay. And those 10 different people, or he sells the car to these 10 different people, right? So that these 10 different people are basically owning a car that is not owned by Miguel, right? It's actually owned by me, but Miguel is profiting a 10x on that car that he basically got from me, right? And that's essentially what synthetic shares are. Is That's why the name synthetic comes from, because they're not natural, because they are shares that don't really exist. And what generally companies will do, they will kind of count those shares, because brokers have fiduciary requirement to kind of count and provide the count of those shares. And what a lot of people have been saying is that there are so many synthetic shares to the point where there's more synthetic shares than actual real shares of AMC. And so they've been trying for many very different ways to kind of get those counted, right? And it was very difficult, because again, then there's the brokers, there's lobbies, there's a lot of weird stuff that happens behind the scenes. And the idea with this is that because this is a one-to-one to AMC, it should, in theory, because only real shares will get an ape. So if you're shorting, you don't really get an ape share, right? So in
Hmm.
theory, what this will allow is to basically understand from how many people hold ape actually how many shares there are, and then you can basically compare that to how much there is in the float. Basically, float is like you know the total amount of shares that are out there. You can compare those two, and in theory, what people are thinking is going to cause the short squeeze is because brokers are going to force, because they cannot hold synthetic shares, or they shouldn't do. They will be looking into kind of getting rid or forcing people that are kind of borrowing over and over and over the same share to basically close those accounts, so that is going to force them to buy, just like Miguel said, and then that's going to force the price to go up. Again, this is all kind of, you know, almost fairy tales to a certain extent, but that's kind of like the whole part of what is behind this whole movement.
Yeah, so there's a lot to unpack here. Uh, the first thing is brilliant PR on naming it ape, but also brilliant maneuver on it's not guaranteed to happen, but it's looking like one of the intentions of this is to unveil the bruise from the short sellers and kind of trapping them, because it will become evident to everyone that there's over shorting on this stock. Because as you pointed out, if there's all these synthetic shares, but they can only be used for shorting because that's how we make up these shares, then it to take your car example again, to pick it up again, for every car that a person can buy, there's 10 cars that people can sell. And so this drives obviously the automobile industry down in the value of a car. So it's supposedly what is happening here with AMC. So it's supposedly what has been tackled and
Yeah,
encountered by this maneuver. So eyes will be on AMC on Monday.
yeah,
Thanks, Jose, for your detailed explanation.
that's
I
okay.
have seen a
Pleasure.
flurry of tweets this week, and I gotta admit I didn't pay much attention to it, but they did seem a bit convoluted, and so this puts it into clarity for me and hopefully for the listeners. But do let us know if you have questions on this ticker. Um, all right, Jose, we are getting ready to wrap up today. It has been longer than we had planned for, but honestly, I'm really happy with the discussions that we had today.
Yep.
We have covered a lot of ground, and I'm excited about where these short term goals will take us and how we're going to set up over the next 4 months for the road to 1 million. Any parting thoughts before we go?
Yeah. So the number one is we're looking into setting up. So we have a website already. It's called firesidepod.com. We are going to be setting up social media accounts and so on, Twitters and Instagrams, and the whole 9 yards. But specifically, we're going to be setting up a Patreon. Now, we're not specifically looking to it's not, we're not looking to like a source of income or anything, but what we are looking into is building a community, and we just feel that really to build a community, there's two main ways: Discord or Patreon. We feel that at this stage, a Patreon is going to be an interesting way to start. We're not looking for, as I said, we're not looking for any type of donations or anything. It's more like as we're looking to build a community really at this stage. So once we have those links up, we will be sharing with you. It's probably going to be all under Fireside Pod as well. We're going to make that as probably our main handle for social media. But really, this has been really, really good episode. I think we got through a lot of stuff. I think every episode we just kind of, I can see as we're talking and Miguel is taking notes, I can see them keep popping up in our Notion document, and it's quite exciting to see kind of like conversations leading to more conversations to lead more conversations, and so I'm very excited for the next episodes. I'm very excited to see how far the conversation is going, and most of all, I'm excited to see how we're going to get to those goals that we're setting to ourselves.
Absolutely. Yeah, really enjoyed the conversations today. Thanks, Jose, for your input. Thanks for your explanations and your coverage of the latest news. I think those were spot on. And to everyone who is listening to us, again, let us know of your goals for end of year, your longer term goals, if you have any monetary value attached to them, or if it's something related to personal growth or any other type of area that would apply to the fire theme of our podcast. And until then, we hope you stay cozy by the fireside. See you in the next one.
Bye bye.